Hello folks, welcome back to the channel. As you know, we typically discuss different locations, their USPs, projects, the kind of roads, price points, various set of topics by navigating maps. As you would have seen in thumbnail, this time we're talking about a very different topic, which is rental. A few days ago, you would have all seen that there's a lot of news floating around the rental 3 BHK rentals for very specific set of properties. So I wanted to spend some time and discuss two specific topics when it comes to rental. One, from someone who is in the market to find a unit for rent, which is from a consumer's point of view. We'll go deeper into how you should be thinking about it. And second would be from an investor point of view. If you have a unit, how should you be approaching rental market? When is the right time to get in? All with, like we always do, data-backed approach. So the reason why I'm showing this map is here is where the hotspots are. This is where the inventory is. So it's natural that we'll explore what are the rental prices in each of these clusters. So you have Madhapur, Kundapur, Nalagandla, Tellapur, Osman Nagar, Financial District, and then we have Kokapet. Right? So these are the clusters that we look at. And let's start with something that we've seen. Most of you would have seen this was the data that was floating around, right? It had 3 BHK rent for different markets. But in my opinion, this is not the right way to look at it because you don't know what the size is. You don't know the benchmark. Is this high, low? How should you even be looking at this data? So let me delete that and sort of go into what I've explored by looking at different micro markets. What is the average rent, lower end, upper end, and how does it compare to other markets, right? Before going into the data itself, if you're in the market to find your next rental home, the typical benchmark that financial experts use, and also something that I would recommend, is not to go about 30% of your monthly income. Now what that means, if you collectively as a couple or a single income bring in 2 lakhs per month, you should not be going for anything over 60,000, ideally best practice. As a result of wealth and as a result of women workforce going into corporates, we've seen rents sort of explode in the last decade or so. Now let me just go a little deeper. If you're looking to sort of pick up a home or rent a home across different markets, how does it trend and how is it different from other markets? Is it really pricey? So what we see is the more premium areas like Financial District, Kokapet, they're in the range of 25 to 45, Kondapur 28 to 35. Again, we are only looking at gated communities, relatively good communities, and doing an apple-to-apple comparison across different cities. Gachibowli around the similar range. Jubilee Hills, very, very scarce demand. I think it hits close to 70, 80 rupees per square feet. So what you see is consistently the upper end is depending on the market, 30 to 45. And if I were to compare across different markets, that's quite similar. Like Bangalore upper end is 50 in the premium areas, and similar is the case with Pune. Upper end is well above the 45 that we see in our markets. Well, MMR and Gurgaon are definitely an anomaly when it comes to benchmarking, but you can clearly see much higher. But what I found interesting in this analysis is the lower end, right? Like the affordability or the entry for some of these markets. Like Kondapur seems to be Manikonda seems to be the least at 25. I'm sure you can find some at 20 for sure. But some of the other markets offer a bit more spread, right? Like there's more wider range, 18 rupees, 20 rupees, for example, 15, 16. I'm sure they're very far away, but still, offering affordability in good communities. That's something that's missing, and potentially, hopefully, with new clusters, new areas emerging, we will see that affordability in the lower end also improves. So the summary of this is, while the price points are comparable to other markets, especially from an upper end perspective, it's quite low compared to other markets. The lower end on the spectrum is also quite high. So the need of the hour is some more affordability in some of these good societies. And there are a few blockbusters like truly anomaly projects like My Home Puja that you would have seen, 75 rupees per square feet. right? And I know for a fact that they sold some of their units at 6,500 rupees per square feet, and now that's 11-12%, which is really unknown in the world of residential real estate segment. Jayberry Peak 63, the more recently handed over DSR Fortune Santale Skyveras 54. Like, you do have these anomalies, but this is a good way to look at it. Now, those are the two things. Just to summarize, there are options. There's a spread of 28 to 45 in Hyderabad in terms of rupees per square feet. You should not be ideally exceeding more than 30% of your monthly income. And then the last thing to bear in mind is inflation. And all of this comes with some form of inflation, standard 3 to 5%, more emerging, higher the inflation, more established, lower. And that's something that you should absolutely bake into your contractual agreement. Like, when you get into an agreement, you should lock in on what that inflation rate looks like. So hopefully that helps and helps you negotiate better, understand the price points better, understand the rationale for some of these price points, and put things in perspective that we are not too far away from other metro cities. Now, the last thing that I will say and wrap up is from a homeowner's perspective. Now, I know a number of us are in the market, are investors, want to get some sort of monthly cash flow, diversify your, cash flow on a monthly basis, and real estate and residential is usually a good bet. Now, as you can see, maybe let's take my home Puja as an example. And I was looking at some of the other properties like Prestige Highfields, Prestige Beverly Hills, all falling in this 35 to 40 or 30 to 35 range. The yield is really strong when you enter very early. Let's say you're picking up a unit at 7,000. Usually the rental yields are all in the 2 to 4% range at max for something that you're ready to move in. So Prestige Beverly Hills is giving you a rental yield of about 3% if you buy now. But if you entered early, let's say 4 years ago or 3 years ago when it launched, you would easily be making at least 6-7%. Puja is an exception. I would say Peak also to some extent is an exception, where you hit those double-digit yield numbers. And the right way to look at it is from an IRR perspective, and usually that's a bit of a financial concept. We won't go into that, but if you purely look at it from ignoring time value of money, if you're purely looking at how much did I invest, how much am I getting, the earlier the better, and your cash flows and your EMIs are also spread out, and it easily beats the 7.5, 7.6% if you enter early. That's an added advantage that most people ignore. They anchor on the 2 to 3%, which is true, but you ignore the long-term benefits that if you enter early, you can actually beat the... Alright, that's some food for thought. Hopefully it helps and have better intel as you navigate the rental market. And in bottom line, I'd like to say, we're not super expensive. Yes, things are getting expensive, but you always have optionality, especially with different locations. Even within a location, there's a spread. So do be considerate of the kind of options you're exploring. With that, we'll call it a wrap. Hope you found it useful. See you in the next video.